So let me ask you how we can have what we have right now in the labor industry. We have more than 4 million new jobs we've created in the last 6 months. We have, at the same time, a record number of job openings, and yet we have the lowest percentage of people actually employed of the overall population in something like 40 years.
David, as you said, I have been watching this for 40 years, actually, as it happens myself, and I've never seen anything quite like it. I think this will be enormous amount of grist for the mill of economists to study in the years going forward. But essentially, yes, there's strong demand for labor. The country, at least so far, has been reopening, in large part thanks to the federal government and all the stimulus, and yet a large number of Americans are reluctant to go back to work. For a variety of reasons. There's a lot of polling data on this. Some of it is health concerns. Some of it is the fact that they've decided simply to leave the labor force and retire. Some of it is the expanded unemployment benefits that actually pay some people more for not working than they were getting working. And a lot of it, though, is the fact that people's balance sheets, the household balance sheets, are in extraordinarily good shape. You had an enormous amount of financial support from the federal government last year. Total income earned by Americans, including federal transfer payments, was actually $1 trillion above what would normally have occurred last year. And households spent about $1 trillion less than they would normally spend last year. And so people don't have to go back to work because in many cases, and obviously I'm giving you broad generalizations, there are plenty of exceptions in both directions. But on an aggregate basis, households are in extraordinarily good shape and many people don't have to go back to work and they're choosing not to.
Before this pandemic, I think some people might have said it's sort of a buyer's market. If we make the employer the buyer, that basically they can largely dictate the terms. The bargaining position was really stronger for the employer. Is it possible that's shifted because of the pandemic?
Well, I think it's shifted for the moment. I'm not sure it's shifted forever. It's shifted for the moment for the reasons that I just described, that people, I think in general, again, broad generalizations, people have the wherewithal to not go back to work. And so they are able to a greater degree than they have in the past, as you suggest, dictate the terms under which they're going to go back to work. That should be a somewhat transitory effect. People can't spend their savings forever. At some point, most Americans need to go back to work and they will have to go back to work. But in the short run, what's going on, as you well know, and everybody knows, is that employers are raising pay, especially for people at the bottom, which is in many ways welcome news, to try to get them to come back to work. And as you also said, we have created a lot of new jobs. So slowly but surely, they are coming back. And I would expect that trend to continue over time.
It's early going, and you know the dangers better than I of trying to make long-term projections off of single data points. At the same time, what do you think about the work from home phenomenon? Has it injected into the negotiation between labor and management a new element where it used to be mainly about pay and hours? Now we have where we're going to be working from. We see a lot of people saying, you know what, I'm willing to go back, but only if I can work from home.
There's no question, and again, the polling data brings a lot of this out. There's no question that the work from home and just a lot of things that relate to the pandemic, this extraordinary once-in-a-century event, have changed the way people think about many of these things. And yes, there's no question from the data that people are putting a greater value on the ability to work from home. And if they're, for many of them, if they're choosing between two jobs, one of which they're allowed to work from home, one of which they're not, they're more likely to choose the one in which they can work from home. But that's okay for employers too. For many of these people, you can work from home. But as I said, I do think in the fullness of time, the luxury that people have today, which I'm fine with and thrilled by, of being able to make these kinds of choices will diminish, and people are going to be in a position where they're going to need to work, and the jobs will be what the jobs are. Some of them can be done remotely, but many of them can't.
Steve, let's inject one other element into this that you know well, and that's organized labor. Certainly you dealt with that when you restructured the auto industry. President Biden and his administration have made a priority of really advancing the cause for organized labor, which, if had happened, would reverse something that's been going on for some time. We're down to just over 10%, I think, of the private workforce that's organized right now under a union. Is it possible for the Biden administration to turn that around?
I think they can make some difference. There's no question that the balance of power has shifted over the last 20, 30, 40 years away from organized labor and to employers. Labor's share of profits in the economy had dropped to a relatively low level. Corporate profits have been incredibly strong. Real wages had not done particularly well. And so, yes, it is both necessary and possible to begin to shift that around. I think you want to be, and I'm all for organized labor, but I think there are a couple things you want to be careful about. Number one, something we saw in the auto industry is that you want organized labor to focus on pay, not on job restrictions. Where General Motors had 300 different job categories under its collective bargaining agreements, which we eliminated virtually all of them, so that people could actually work more flexibly and more productively. And secondly, you have to be a little bit careful about what I'll call the tradable sector, basically manufacturing, things that we export, where we are globally competitive. And if labor costs here get too high, what's simply going to happen is jobs are going to go somewhere else. And some of that has happened in the auto industry. The share of auto jobs that have moved to Mexico has been growing because Mexican labor is very productive and much, much cheaper. And so you have to be careful about that too. But within those parameters, there are things that we can and should do to increase the power of organized labor. And I commend the Biden administration for thinking about that.
Talk as an investor. I mean, you're a long-term investor. If you knew, and we certainly don't know, if you knew that in fact there was a shift going on in the relative importance, strength of labor versus capital, how would it change your investment decisions, if at all?
One of the interesting things about the current situation is that it's not so much a shift from capital to labor. They're both actually winning. Labor is winning because pay is going up rather quickly, as I said, especially for people closer to the bottom. But actually, capital is winning too, because the fact that there aren't as many jobs coming back as we had before, but our output is close to where it was before the pandemic, means productivity is increasing. And so what you're seeing in the second quarter earnings numbers that have been coming out is that companies have done a surprisingly good job of maintaining their profit margins, even as they're paying people more, because they're simply using fewer people to do the same thing. Now, at some point, if everybody decides they want to go back to work, that creates a different kind of problem. But for right now, we're in a kind of happy spot where labor and capital are actually both winning.
Insofar as labor starts demanding pay raises and we start having to increase that, what does it do to margins? Does it affect what sectors or what areas you invest in because they might be more margin sensitive?
Well, sure. As I said, sure. There's no question that paying people more affects margins, and so you look at a lot of the companies in the hospitality area, the Amazons of the world, companies that use huge amount, Walmart, Target, use huge amounts of relatively low cost labor. This will put pressure on their margins, and it is something that we think about and need to think about. But as I said, for the moment, as you look at the earnings reports that are coming out now, these companies have been very, very successful at simply doing more or as much with fewer people. And so at the end of the day, their corporate profit margins have stayed quite robust. It can't go on like that forever, but for the moment, it is.